If you believe that as long as the sales are coming in, your business is fine and the cash will sort itself out, this video is for you. That belief is one of the fastest ways that businesses run out of money. In our last video, we talked about how cash flow is really about timing and not numbers. And one of the biggest reasons that most founders struggle with cash flow is because emotionally, they treat sales as if it's cash. So intellectually, most people know that to be true. It's almost obvious. It's redundant. But the challenge is emotionally and in the operations of the business, when sales are made, founders tend to treat that as we have money in the bank. And the underlying assumption here is as long as we have sales, everything is good. And what happens next? You start making decisions based on this emotional belief. You start committing to expenses you cannot afford. You delay making payments or paying yourself because cash is coming in. You feel very calm in the busy months, even though there's no cash coming in, because to you, sales feels like progress. And it's easy to forget that sales are promises. They're not actual resources in your account. So let's break down some of the basics. What does a sale actually represent? A sale is basically an agreement. It's not cash. The time between you send out your invoice and you actually get paid, a lot of things have to happen. You have to deliver the work. You have to send the invoice. The customer has to actually pay you. And the timing of that payment has to line up with your expenses. And until you receive that cash in your bank account, your business is actually funding everything. So treating your sales as if they're cash creates this false confidence. You want to feel confident about your business, but that is false confidence. And that false confidence is much more dangerous than being cautious when it comes to your sales and your cash. The runway in your business is going to disappear if you assume that because we have sales, we're all good. Forgetting that the runway in your business, the time it takes for you to sustain yourself before you run out of cash, is not based on the activity, the action that you're having in your business. It's based on liquidity, money in the bank. So you don't run out of business because sales have stopped. You run out of business because you don't have any more cash, or the cash is not coming in when it is actually needed. And it's common for business owners that go belly up to feel fine right up until the deadly last second. So a healthy way to think of sales is to think of sales as future cash, right? Not present liquidity. Your sales are only going to extend your runway when they turn into money in the bank. Until then, treat it as potential, not protection. Don't move around thinking we're safe, we're protected because we have sales. You're only safe and you're only protected when the money has actually hit your account. And once you start separating those two, emotionally and operationally, the decisions you make, your business will start to feel a lot calmer. So if your sales has been giving you this false confidence that you have much more time in the business than you have, let's put it back into its proper place. Sales tells you that there's demand for your product, for your service, that people are interested and they want to use your services and they intend to pay. Cash tells you that you've been paid and these are the expenses you can afford and for how long. So you can pay your rent, pay your salaries, pay your suppliers for how long. If you haven't watched the Hub video explaining what cash flow is, I suggest that you watch that video to get a good understanding of what your cash flow actually is. And the next big question that founders are going to ask is, why don't cash problems show up immediately? Usually they show up late, right? That's the question we're going to be answering in our next video.